Good afternoon to all. I, on behalf of TATA Elxsi Ltd, welcome you to the Q3 earnings con call. We have with us Mr. Madhukar Dev, the Managing Director and CEO, Mr. Manoj Raghavan, Executive Vice President EPD, and Mr. Nitin Pai, Senior VP Marketing. I will now request Mr. Madhukar Dev to give a brief on the financial results.
Thank you. Good afternoon. Once again, on behalf of TATA Elxsi, I welcome you all to this session. It has been a reasonably steady quarter. In fact, I think it was a bit better than the overall revenue number shows, primarily because the services segment had a growth of about 4% as compared to the preceding quarter, and of about 14% as compared to the same quarter last year. And as those of you who track the company know, the number that we really monitor and want to boost is the services segment revenue. The system integration and related services business is largely a reselling operation where we source equipment and supply to our customers. And over the last several quarters, we have been trying to get our customers to buy directly from the suppliers and reduce our role to just installation and services. So that business had a very weak quarter, which is understandable. Q3 is never a very strong quarter unless there's a leftover order from Q2. Our services segment did well, and consequently, the bottom line results are also quite satisfactory. Now, what I will do is request my colleagues, first Manoj Raghavan, to talk about our embedded product design, the highlights for the quarter, and then Nitin Pai for covering the rest of the company. So over to you, Manoj.
Thank you, Madhukar. Good afternoon to everybody. This is Manoj. I head the embedded product design business for TATA Elxsi. Traditionally, we've been operating in a few segments like automotive, media and broadcast, communication, and the medical industries. As Madhukar said, we've had a steady quarter as far as EPD is concerned. In the automotive industry, primarily we focus on the OEMs, the original equipment manufacturers, as well as the tier 1 companies. In both these segments, we have seen a good uptick in our services. It's been a steady quarter. In the media and broadcast space, our primary markets are the operators, the multi-service operators, and the OEMs. However, we see emergence of new media as well as OTT opportunities coming our way. In fact, there are two pretty decently sized opportunities in the OTT space that we have started, and hopefully in this quarter those services will be launched in the marketplace. So that's a good addition to our overall portfolio. In the communication industry, we see a lot of traction in the software-defined networking space. Traditionally, we were not working too much with the telecom operators, and a communication business primarily used to focus on the OEM space. But right now, this SDN opportunity has given us a good opportunity to get into the telecom operator space. We're already working with a couple of telecom operators in the US, and we see good traction in 3 to 4 other operators worldwide that we hope to convert in the coming quarters. In the medical space, you would have seen a press release that we have made on the MX Health case, where we are developing a very specific India-specific or a developing country-specific sort of a lab-in-a-box product for malaria and sickle cell anemia disease. So this is an order which we are continuing to execute, and hopefully in a couple of quarters that will be out in the market. So overall, I would say a pretty good quarter and a pretty steady quarter for us. Thank you. I think that's my updates, and I would request Nitin to add a few.
Thanks, Manoj. Good afternoon, everybody. While Manoj has covered a large part of our business, which is to do with technology services and embedded product design, I thought I'll touch a little bit upon what we've been doing in the design space. As you all understand, while the design business for us, yes, is a standalone business too, but it equally has a very important strategic and synergistic play with what we do in technology. So to that extent, I think we continue to see significant synergies and value from joint projects that we take up for customers both in automotive as well as in the broadcast space. In the automotive space, of course, it typically tends to be HMI and user experience, which is starting to become more and more important, especially as digital becomes the mainstay of how you interact with products and services. Equally, in the broadcast space, as OTT picks up, so whether you look at typical OTT apps from broadcasters like Sony Live or Viacom Voot or Z or so, where we have been participating with them, to what operators do, we have an excellent synergy between what we do as design and technology. There are other areas like product design for packaging, for consumer electronics and consumer appliances continues to do well. So you'll find that there are quite a few products that are launched in the market, including Fun Foods chocolate spread, ceiling fans for Panasonic, and so on and so forth. So that is business as usual. But I think what is becoming more and more important is the synergy with the technology space in terms of joint projects. Equally, a quick update on the other digital side is the Kochi One app, which is the app that we designed and developed for the Kochi Metro to provide consumers a unified, integrated digital passenger experience, is now launched and is now available on the App Store, both on Android and iPhone. The design business continues to win awards. We're happy to see that recognition coming in nationally and globally. So as recent as in December, the design business was awarded 2 awards by the CII Design Excellence Awards ceremony. One was for the best interaction design. This is really for the project that we did with Spintails, where we developed an augmented reality-based experience for kids. So that's now been recognized by CII. Equally, it was featured on NDTV Prime. On the other hand, as a category winner, TATA Elxsi was awarded the Best Visual Communications Firm for 2017. So overall, I think whether it's EPD and the sectors within or design and the synergies between the design business and what we do as electronics, I think we're continuing to see excellent progress. That's a quick update from my side. Thank you.
We would now be open to questions. If anyone has a question, the moderator will tell you the procedure and we'll attempt to answer.
Thank you very much. We will now begin with a question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset mode while asking your question. Anyone who would like to ask a question, please press star and 1 at this time. The first question is from the line of Apurva Prasad from HDFC Securities. Please go ahead.
Yeah, good afternoon and thanks for taking my question. My first question is on the EPD side of the business. So if you can help us with the split of verticals, if you can split it between auto, media and medical, and if you can talk about how the growth has been this quarter as well as 9 months.
In the past, we have mentioned that the auto business gives us between 55 and 60% of EPD revenue. That continues to be so. The next significant segment is broadcast, which typically is around 30% of our revenue. And the rest is communications and medical put together. There's been no significant change in the composition this quarter.
Right. And also, sir, I mean, you had earlier talked about a slightly medium to longer term growth rate of about 20% for the company. So as I see it, for the 9 months, you're probably falling short. I mean, would you still hold on to that number, say, over the medium to slightly medium term
Yes, indeed. I personally think it is possible to do it, and we are trying our very best to cross that 20% barrier. And in every quarter we have some pluses and some negatives. And in this particular quarter, we did have a number of negatives, including the number of holidays and so on. So if we were to normalize with respect to the unusual negatives, we still think that we can get to an annualized 20% in the medium term.
Right. And also, if you could help us with the outlook of the top account, how is that looking?
It's satisfactory, though we are looking to grow other accounts more aggressively than the top account. In fact, if you see over the last few quarters, the contribution of our top account has gradually come closer to 20% than 25%. And the top 5 to below 45%, and the top 10 to below 60%. So the diversity in our client concentration is certainly improving, and we want to grow more accounts into more significant engagements. But there's nothing negative in the top few accounts. Everything is under control.
Okay. And a few more data points, sir. If you can help us with the headcount and the utilization for Q3 as well as the previous quarter.
Yeah. We closed the December quarter with a headcount of 5,400, which was an increase of almost 300, net increase of 300 over the previous quarter. And we are continuing the hiring that we started in October. And what was your second question?
Utilization.
Utilization is currently at about 82%, and I don't expect that to be moving up very much more.
Right. And so where would the active customer base stand as of now? The number of
totally about 150 active customers. So clearly there is a bit of a tail, as you would notice, but we think a good number of these are high potential customers for the future. They may take several quarters to become significant, but these are strategically important, and that's why we have engaged with them.
Great. Okay, thanks. I'll come back in the queue.
Okay.
Thank you. The next question is from the line of Niket Shah from Motilal Oswal Securities. Please go ahead.
Yeah, thanks for the opportunity. So just two questions from mine. The first one on the auto part of the business. If you can share that within the auto piece, how much would be our share coming from tier 1s and how much would be coming directly from OEMs now? I'm just trying to understand because in the past we've seen more and more business coming directly from OEM. So has that trend continued?
Certainly the OEM engagements, each engagement is bigger and more significant than the suppliers. But if you look at our 60% of our EPD revenue coming from auto, which is normally the best case in a quarter, you find that almost half of it is from OEMs and the other half from the suppliers. So, once in a while it dips one way or the other, but it's more or less half and half.
Got the point. The second question was on the broadcast part of the business. How much would be the share of OTT and this new media that, as a percentage of the total broadcast revenue? So within broadcast, how much would be the share of this OTT and new media?
Currently, it's a small percentage. It's about 10%. But right. In next 4 or 6 quarters, we expect that to grow.
Got it. So is it safe to assume that bulk of the growth in the broadcast space is coming because of OTT and new media and the traditional one wouldn't have seen significant growth?
No, I wouldn't think so because the MSO space, the traditional MSO space, is still a large space. We certainly have some very large customers there, but the opportunity to grow across different MSOs in different countries is a pretty significant one. So it is not yet exhausted, so we don't believe that the MSO space would go down.
No, I mean, it wouldn't go down, but just trying to understand for this quarter or for the 9 months this year, you would have still seen growth in the traditional, broadcast business.
Yes, we would still have growth in the traditional broadcast space.
Perfect. And the final question, a very bookkeeping one, on the employee cost part of it. In this quarter, we've seen slight decline in employee cost on a sequential basis.
Yes.
What would that be largely attributed to?
Essentially, the replacement cost is a bit lower than the attrition cost, marginally.
And that trend should continue, or it's like too tough to?
Hopefully not.
Okay, perfect. Thank you so much, and I'll come back in queue.
Okay.
Thank you. The next question is from the line of Vimal Gohil from Union Mutual Fund. Please go ahead.
Thank you for the opportunity, sir. Sir, my question is related to the industrial design. While the embedded product is doing extremely well, there has been some softness on the industrial design part of the business since last 3 quarters. Could you just give me some more color on the same?
Yes, you're right. There has been some softness in that. You see, the large engagements in design come from service design opportunities, and the smaller ones are really product or packaging and such design opportunities. Now, what has been happening is the mix which we had consciously built in favor of service or experience design has got altered into being more product oriented. So which necessarily means that we are seeing a not so aggressive growth. We are trying to correct it, and we have a pipeline of reasonably good prospects for service design, and I think over the next 2 quarters we should see the balance being restored.
Right. So you do see the growth returning back to this particular service line in the next 2 quarters itself.
Yes, indeed.
Right. And sir, the margin surprise was something which was good this quarter. I mean, at 27, this is probably an all-time high margin for you.
Yes, it is.
One is, would you attribute this to the mix change in this business, or is it something more structural in nature?
No, it's just attributable to the mix change in the quarter. There's no major structural change.
Right. And so I think a 25% kind of a margin will be sustainable going forward.
Yes, that's what we'll work towards.
Okay. Fair enough, sir. Thank you.
Thank you. The next question is from the line of Rohan Advan from Multi-Act Equity. Please go ahead.
Yeah, sir, thanks for the opportunity. Sir, a couple of quarters back, we had in a press release stated that we've outlicensed our autonomous driving technology to one of the top 5 OEMs. So has that flown into the revenue this quarter or in the earlier quarters, and what is the nature of this deal?
Yeah, I'll ask Nitin to answer that. He is more closely associated with this particular transaction.
Sure. Thank you. Yeah. Rohan, the deal was a licensing deal coupled with integration and support services. So to that extent, there is licensing as well as integration revenues that have been accruing from the time that we announced it, which was in May, over the last 2 quarters, as well as in the upcoming quarter and more. Right now, it will of course have a finite time limit in terms of how many quarters we can accrue it for. But what we are hoping is that we will continue to support the integration and the testing of the autonomous car for various geographies for their OEM. So as such, licensing plus integration revenues, part of which is accrued in the previous quarters, part of which will continue to be accrued in this coming quarter and beyond. But what we are hoping is that it doesn't stop with these 2.
Okay. And does this have a margin impact on the higher side, which would wane once these revenues don't accrue?
No, this is a one-off deal. It
cannot have a very significant impact on the market.
Okay, understood. And my next question was on, I think you've given the INR revenue growth. What would be our constant currency revenue growth this quarter?
Not very different as compared to the preceding quarter. Overall revenue 1.2% up, and as compared to the previous year's quarter for the services business, about 14% up.
Okay. And lastly, if you data point of attrition rate, if you could share.
Yes, attrition rate in the quarter annualized was about 12%.
Okay. Thanks so much for taking my question. Best of luck for the coming quarters.
Thank you.
Thank you. Anyone who would like to ask a question, please press star and one. The next question is from the line of Mayank B from Dalal & Broacha. Please go ahead.
Good afternoon. Thank you for taking my question. My first question was pertaining to the Autonomy platform. Post the success of licensing the platform with two OEMs, what is the vision of the company? What are we looking at from here on in terms of approaching new customers, and the step after this? As in, what is the vision of the company? I wanted to know that.
I'll first tell you the vision bit, and then I'll ask Nitin and Manoj to supplement what I'm saying. You see, I think we are at a point in time where we can get engagements based on the capability that we have. I think that will change in the next few years, and we'll get engagements based on the IPs that you have to license and the services that you build around them. And we are gearing ourselves for that change. Now, specifically to your query on Autonomy, Manoj and Nitin will answer that.
Yeah. So this is Nitin here. If you look at where we are with Autonomy, we're continuing to both showcase and market this across the world. We are finding traction with both suppliers who want Autonomy more to be able to validate as well as test and build certain of their components and modules for autonomous driving. Equally with OEMs who would be our prime candidate. So that, in terms of the passenger car market, continues to be the key focus. But equally, we are starting to look at where else Autonomy would make sense, because we do see also that there are niche markets. So whether you look at applications in agriculture, applications in fleet transportation and so on, we do believe that there are applications that go beyond the classical passenger car market, which of course, as you would understand, is also overheated in terms of the number of companies trying to build IP as well as targeting the space. So we are exploring both. One is continued traction in the predetermined area of passenger vehicles. Equally, a very specific targeted campaign to look at very niche markets, including fleets, agriculture, and others.
Yeah. Oh. And in fact, this month we participated in the Consumer Electronics Show, and we definitely showed our Autonomy, solution in our booth. So we definitely believe that there is a lot more market potential to this particular IP that we have, and hopefully in the next few quarters we will have a lot more licensing revenues for it.
Okay, thank you. And last question was, I just want one data point, the on-site and offshore effort mix, please. Not the revenue mix, but effort mix.
I don't have the effort mix readily. I can tell you the revenue. Offshore is 61% in the last quarter.
Okay. Okay, thank you. That's it from my side. Thank you.
Thank you. Before we take the next question, we would like to remind our participants, you may enter star and one if you wish to ask a question. The next question is from the line of Naveen Bhotra. He's an individual investor. Please go ahead.
Congratulations to the management team for excellent set of numbers once again.
Thank you.
My first question is regarding this fixed dose pen for which we have filed a patent. So if you can elaborate on this. And the second question is regarding the IPR licensing revenues. Our software services has grown by 14% this quarter.
Yes.
And system integration has declined. So
Yes.
in the software services revenues, are there substantial licensing revenues included? If you can elaborate.
Yeah, the revenues, licensing revenues are included, but it's not very substantial. It's just about a few percentage points of the segment revenue. Now, as regards the patent, could you clarify what your question was?
About that fixed dose pen patent we have filed for. There was around 2 months back.
Okay.
Fixed dose pen.
Yes.
So if you can elaborate on this is on the design front or the complete whole product side patent we have filed for?
Sure. So let me explain that a little bit. So if you, and just for the benefit of others who are on the call too. So as you understand, when you look at drug delivery, especially for products like insulin and so on, which require you to inject this into your body, there are two parts to it. One is the drug that you're injecting, which has patents, and the other is the device itself, which has patents coming from a completely different company. So globally, what has happened traditionally is that the cost of such devices have been traditionally high because patents are owned by a few companies and they tend to demand fairly significant royalties. While drugs tend to go off the patent regime and therefore suddenly can be exposed to much lower costs. So what we have done is done a thorough landscaping, and based on our understanding of the patent landscape there, we have now come up with a completely different mechanism for which we have filed patents. So the patent is being filed on the mechanism because you can't file on the entire device. The devices do already exist. So it's only about how the drug is delivered and what is the mechanism used. So we now have patents of our own that protect us for the uniqueness of what we have developed. What we're looking at is actually to be able to now license this from our side. The ability to license the design with this innovation built in, for which royalties and patents are owned by us.
Royalty and patent. And the product will be manufactured by other...
That's correct. So we have no intent to manufacture this and get into the market directly with our products. The idea is to now be able to offer an alternative to companies who are manufacturing this by saying you don't have to go to the companies who currently own the patent and charge you X. You can come to us and hopefully we will be much more cost effective.
So it will take another 2 to 3 quarters to get up.
That's correct. That's correct. Why? Because it will take possibly longer than that. Why? Because if you look at medical devices, typically your revenues and royalties will be linked to manufacturing and in the time they come into production. So for us to find the customer, for them to qualify through the FDA and other regulations and then to come into production takes a little while.
So that can be quite a substantial going forward, let's say 1 to 3 years time frame, revenue from this mechanism patent we have filed for.
We are hoping for that. I think within that period we'll also know in terms of the patent filing itself, because it's not granted as yet.
Okay.
So we'll also know how much of a firewall we are able to build for ourselves around the patents we have filed.
Okay. Thank you, sir. This is from my side.
Thank you so much, Mr. Botra.
Thank you. The next question is from the line of Nakul Bindal from Karvi Stock Broking. Please go ahead.
Good afternoon. Thanks for the opportunity. So can you give us some color on performance of the Falcon platform in broadcast industry?
I'll ask Manoj to respond to this.
Yes. So Falcon is one of the our IPs in the media broadcast industry. In fact, I'm happy to tell you that in this last quarter, we did license Falcon to a large European operator, successfully displacing a competition there, and it's pretty early stages there. The opportunity for us to grow within that particular account by licensing more racks is a possibility. Having said that, we see a good positive indication wherever we take the solution to different operators. We are able to present a compelling story to them. So in the broadcast space, we definitely hope Falcon will bring in more revenues in the subsequent quarters. So we have a good positive feel and good good set of customers we are going after.
Right, sir. And so, have we launched any new solutions specific to the electric vehicles?
We're working on a number of solutions in the area of electric vehicles. We still do not have any complete solution which can be licensed as is. But over the next few quarters, we should have a handful of them.
Right. And so, amongst the Indian companies, whom do you compete for business on a global scale?
We've talked of this before. You see, we are somewhat unique in that we offer a combination of design and technology services. And that really differentiates us from everybody else, not just in India. Even globally, there are not too many companies who have an integrated design and technology offering. But if you look at specific segments and what we do in a number of engagements, yes, we do have Indian companies and international companies competing. And depending on the segment, if you take auto, for example, we certainly see KPIT all over the place. If you look at broadcast, we do see the big boys there. And so it's very hard to say that we are a one-on-one competition to so and so. It depends on the engagement.
All right. Right, sir. And so, given the cash pile that we possess, are there any acquisition prospects on the table as of now?
There are prospects on the table, and there have been for the last few quarters, but we don't have anything significant to report yet.
Okay. All right. Thank you, sir. That's all from my side, and all the best for future results.
Thank you.
Thank you. The next question is from the line of Ramesh Mantri from White Oak Capital. Please go ahead.
Good afternoon. My first question is, you have articulated a vision to shift from capabilities to IP over time. So what is the time frame, and what is the target for IP revenues, on whatever the time frame target we have?
Yeah, I just wish to clarify. What I meant to say was, today when we go and sell services, by demonstrating capability, occasionally by doing a pilot proof of concept, we are able to win business. I'm saying that in the future, in the next few years, and I see a time frame of 2 to 3 years, this will not be enough to win business. The customers will want something more. They will want us to bring a solution and then get services engagements around it so that they have a shortened time to market. Towards that, we are building a portfolio of IPs so that we can win business on the strength of the IPs that we have, but the mainstay of the revenues will continue to be services.
Okay. Other thing is, in this space, while you require, unlike IT services, you require a lot of design thinking and domain knowledge.
Yes.
So how is the opportunity scalable in terms of clients and also human resources?
Fortunately, we hire a large number of fresh graduates by our standards every year, and happily the quality of the fresh graduates that are available in the market now is significantly better than what used to be around, say, 5 years ago. So I don't see a shortage of raw talent. The challenge for us is to finish this talent, change this talent to a finished product which can be of significant use to our customers and us. And we've started a number of in-house programs to shorten this lead time because the raw material that is available is very good quality. We do supplement this by bringing in laterals with specific domain experience and skills which are not so easy to learn on your own. But overall, I don't see human resource becoming a big challenge in the next few years.
Thank you.
Thank you. The next question is from the line of Apurva Prasad from HDFC Securities. Please go ahead.
Hey, thanks again. So you just mentioned about the license revenue part. I mean, just curious to know where does it stand as of now? So if you put together Autonomai and Falcon.
Nitin, would you answer what percentage of our 9 months revenue would be IP led?
It's about 5%. It's in that region, Apurva.
Of the overall revenue.
That's correct. That's correct. So as you understand, it takes time to accelerate. We're building up a pipeline. So I only hope that it goes north from here.
Right. And just to build on that, I mean, what other elements of non-linearity are we seeing really in the business?
I think there are two parts. One is that while these remain the two flagships in terms of what we're doing in automotive and broadcast, but within automotive itself, you'll find that we do have a reasonable pipeline of other products and solutions. So some of these you would find mentioned in a press release for CES, where we talked of vDrive, which is a simulation software for autonomous driving. We have AutoSAR stacks, which are again becoming a standard for automotive companies across. Equally, we have a V2X emulator, which is used to test V2X algorithms and deployments of V2X across the world. So we do have a reasonable portfolio that would definitely complement Falcon-i and Autonomai. So we are not relying on these two alone. Equally, there is a conscious effort to see how we can grow the pipeline to address other areas too, including communications and healthcare.
Right. And just on that, when you talk about pipeline, how would that have moved, let's say, in the last 9 months or the last 1 year?
Yeah, if you look at the last 1 year, you'll find that if you went one year back, you'll find that we had just announced Autonomai during CES 2017. So that's precisely a year back. We already had announced V2X before that. We had Falcon-i before that. So if I look at it, I moved into last year carrying Falcon-i and V2X from before. We added Autonomai last year. vDrive and some of the other portfolios that we are looking at in terms of automation is what we have added in the last 12 months. Equally, if you also look at the fixed dose pen, so that is also an addition just in the last 1 quarter or so, coming in from the design side in terms of patents, patent-led licensing, and therefore hopefully revenues.
Right, that's helpful, Nitin. Also, just a couple of data points I wanted. If you can help me with the geo mix, the geography mix of revenues as it stands now, and also the fixed price and T&M split, please.
Sure, I'll just turn that to Mr. Dev.
Yeah. The geographical distribution is not very different from the earlier quarters. There is a slight increase in the European share of the business, which is about 44%. America is about 30%, and the rest is Japan and the rest of the world. In terms of fixed price and time and material, it is about 40 is fixed price, 40%, and 60 is time and material.
Right, and so within the Europe, how much would be GBP denominated?
About half of it. Half the European revenue would be GBP.
Okay, got it. Thank you so much, and all the best.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Suman Mitra. He's an individual investor. Please go ahead.
Okay. Good afternoon, sir. My question is that in terms of the overall top line growth, looks like over the last 3 quarters, it is just in the range of around 10 to 11%. Where you are just in the earlier question, you said that your wish is to reach around 20%. So, can we expect as investors that in this year will be ending in the range of 14-15% top line growth? We know that you do not give any guidance, but just want to have an understanding of what kind of revenue figure, top line growth we will be expecting this year, whole year.
Right. See, the revenue that we really track is the segment revenue called software development and services. The other segment revenue is irrelevant. It depends on if a transaction is routed through us or not routed through us. And in this segment, software development and services, we have been clocking about 14 to 15% year on year over the last few quarters. Our immediate objective is to up this to about 20% year on year. It will not happen overnight, but I think we are moving in the right direction.
Okay. And my second and last question is that in the last 1 year, what kind of, because I remember, I think last year, Q1 or before that, you mentioned that you started penetrating into the medical electronics space, and you started one small client in USA and all this stuff. So what kind of opportunity, just to mention that around 15% is 15%, rest of the 15% include medical electronics, but what kind of traction you are getting in that medical electronics space, which is obviously one of the most exciting areas in terms of embedded electronics?
Yeah, I'll ask Manoj to address this.
Yes, so this is a new area that we got in a few quarters ago. So while it's a large opportunity space as we see for outsourcing companies in India, but our learnings is that it's also a pretty slow market. Decision making takes time, and if there are any regulatory trends that come in, and that is when we get an opportunity. So yes, it's been pretty slow growth for us, but however there is a new regulation coming out in Europe called MDR, and we have won a couple of projects for MDR, and this regulation will come in effect in sometime in between 2019 to 2022. So the next 3 to 4 years, we will see a lot of projects focused on MDR initiatives. So right now we are focused to see how we can capture a percentage of those opportunities, and I think we are building up skills and capabilities for that. So yes, it has been a pretty slow, but I think we should be able to recover that in the subsequent quarters.
Okay, thank you.
Thank you. The next question is from the line of Manish Bhandari from Vallum Capital. Please go ahead.
Hi, good afternoon. My question is regarding the revival in Europe and what kind of positive rub-off effect it could have in our businesses in next 2 or 3 years.
Actually, we never saw a slowdown in our business in Europe, and we've seen a positive trend led by the European car industry and the car suppliers, and they continue to have a very favorable outlook. So I don't think there's a challenge there, and I expect the positive outlook to continue for the next few years.
So my second question is, Tata Motors chose Harman International for designing of their car. So is there a way you would have bid for the project, and if you could throw some light, or maybe there's no...
You're referring to the infotainment system.
That's right, that's right.
Yeah, we were also associated with that, with the integration and so on. We are not a supplier of systems, so Harman was the selected supplier, but we had a significant role to play in making that.
Complete validation of that unit.
Yeah.
Equally, some of the connected apps that you saw, you will actually find Tata Motors talking of TATA Elxsi having developed and deployed some of the apps that went into the Connect Next infotainment system, both for Tiago and the other cars.
Sure. Thank you. Thanks a lot.
Thank you. Anyone who would like to ask a question, please press star and 1. Ladies and gentlemen, you may enter star and 1 if you wish to ask a question. As there are no further questions, I would now like to hand the conference over to Mr. G. Vedyanathan for closing comments.
Thank you for joining the conference, and we hope to have you in the future conference also. With this, we come to an end of this conference call. Thanks once again.
Thank you so much. Thank you.
Bye.
Have a